Welcome to today's video. Before beginning, please read the trade disclaimer. Please understand that this is not financial advice, just my commentary and opinion. Don't forget to press like and subscribe and click on the bell icon to be notified of the latest new videos. Hello everyone. So in this video we are looking at the inverted head and shoulders pattern. This is the opposite of the head and shoulders pattern, and this is considered a bullish pattern where the normal head and shoulders is a bearish pattern. So similar to the previous pattern, what we're going to be looking at is the formation of the left shoulder and the right shoulder, and obviously the head. The difference is it's opposite side, it's inverted. Okay, and what we're looking at is a breakout of the neckline, potential retest, and then a push up. And in this case, what we're going to be doing to measure the take profit targets, we have to look at the neckline and measure it to the effective head, and that will be a rough target of where we'd want from the breakout level, so which is the neckline. So in this case, approximately where I have the line right now. Okay, another thing what we'll do is in advance is draw the fib level to break down for potential targets for where one might add where the stop loss is. Okay, so the neckline in this case is here, and also need to understand is the right shoulder can be low, okay, can't be the same as the head, or it can be smaller. Okay, the other thing we also need to understand when looking at a inverted head and shoulders pattern is when we start to get the formation of the right shoulder, as we approach the neckline, we should potentially see maybe an increase in volume in this case as we go up to try and break that. Okay, so this is going to be important to understand. Now with this sort of pattern, there is a chance where price may not come down and test the neckline and then bounce up. It could go straight up to its target. It could even potentially move halfway down before going up, and this it can be normal. So what we're going to do now, in this case, we have a potential target of our profit, which is, as mentioned before, from the head to the neckline, and we're now going to look for a long position. So first area of looking for a long position can be on the break. So what we're looking at is the break of the neck, and we target that high. Okay, and our stop loss can be on the low, which could be at 0.5, which is the last low, the right shoulder. This does, still create a good trade, but the risk to reward is a lot lower. If we use the fib level from the neckline, basically to the shoulder, we can potentially create levels where we could have better stops and better overall risk to reward. So in this case, if we use the 0.75 level, our risk to reward is a nice 5.73 to 1. In this case, if we look at it from this point, if price did come down here, it will retest the entry. In certain cases, it could come lower and then bounce up. In certain cases, it does not have to do that. Okay, now again, it will depend on where you enter. If you caught it on the break and price does this fashion, it becomes a very nice trade. If the price breaks and you wait for price to come back down for a potential retest, then what we expect is your order may not be filled. What we're going to do is, if price does do that, and we want to ensure that we are in the trade, entry could be roughly halfway up when we get a pullback. And in this case, if maybe around here, so the price breaks out, we start to get a pullback, we put a potential order halfway up, and our stop loss can be on the break zone neckline effectively, or at this is 0.75 level. In this case, 0.75 level, you get a 3.3 to 1 risk to reward. If we have it on the break of the neckline, becomes slightly more risky, but you get a nicer 7.21 to 1 in this case. Okay, now if you wish to take it a bit more aggressive, one could take the trade on the bounce or when the creation of the right shoulder starts. So effectively you could have it here with, if we get the confirmed bounce, we start to get price to move up. You could enter as, preset the order at 0.25. Your stop loss could be then at the, the peak or the low of the right shoulder. And again, we will target that high. And in this case, you have an even bigger risk to reward of 8.93 to 1. And in this case, you could move your stop loss to break even as you approach the neckline. Okay, or even potentially take profit. So these are the areas that I would look for when trading the inverted head and shoulders pattern. Thank you again for watching this video. Would recommend you look at the previous head and shoulders video as well. And I'll see you in the next one.